Hello and welcome to TradeFlow Television,
bringing you valuable analysis and actionable intelligence
through the global commodity markets.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Aluminum Corp of China Limited, known as Chalco, said on Thursday it would implement flexible production, a phrase used to refer to output cuts, at 3 alumina production lines accounting for about 10% of its total capacity. Chalco is the world's biggest supplier of alumina, the substance used to make aluminum, with an annual capacity of 18.86 million tons, according to its annual report, which adds that it produced 13.8 million tons in 2019. Chalco, which also produces aluminium, said in April it would consider cutting alumina output if prices remained low. The same month China's alumina output hit a 9-month high of more than 6 million tons as COVID-19 restrictions eased.
Moving on to the top news in the energy sector.
The collapse in oil demand from the COVID-19 pandemic is hastening the reckoning for those refiners already struggling as new capacity overtakes demand, posing an existential threat to many, particularly Europe's aging plants. Even before the pandemic struck, which at its height destroyed over 20% of global oil demand, analysts expected global refining capacity would have to rationalize, particularly in Europe. According to consultants Woodmac, 1.4 million barrels per day, or around 9%, of refining capacity is under threat of rationalization in Europe in 2022-2023. Goldman Sachs expects global refinery utilization rates in 2021 to 2024 to be 3% lower relative to 2019, heightening competition and eventually leading to permanent plant closures in developed markets.
We will now look at the top news in the agricultural sector.
China booked deals to purchase U.S. corn and soybeans, the U.S. government said on Thursday, the first known sales of U.S. supplies, since China asked suppliers to guarantee their cargoes are not contaminated with the novel coronavirus. The U.S. Agriculture Department said that private exporters reported the sale of 202,000 tons of corn and 126,000 tons of soybeans for delivery during the 2020 and 21 marketing year that begins on September 1st.
Next we have agricultural price moves.
Chicago corn futures were steady on Thursday, holding near a 3-1/2 month high as hot weather and a smaller than expected plantings estimate raised doubts about harvest prospects. Soybeans stayed firm and reached a new 4-month high, also supported by a lower than anticipated acreage estimate in the U.S. Department of Agriculture's closely watched planting report this week, as well as investor optimism about economic recovery from the coronavirus crisis. Wheat was little changed as traders sought a clearer picture of Northern Hemisphere harvesting. The Chicago Board of Trade most active corn contract was up 0.2% at $3.61 minus 1/4 a bushel, as of 12:04 GMT. It earlier equaled Wednesday's 3-1/2 month high of $3.63, with analysts saying the market remained burdened with large supplies after the coronavirus epidemic hurt demand. CBOT soybeans added 0.3% to $9.01 minus 1/2 a bushel after edging up to a new high since early March at $9.03. Wheat fell 0.3% to $4.97 minus 1/2 a bushel.
Raw sugar futures on ice fell on Thursday as easing tightness in refined, white sugar supplies overshadowed demand recovery hopes linked to encouraging results from coronavirus vaccine trials. Coffee and cocoa steadied, meanwhile. October raw sugar was down 0.05 cents, or 0.4%, at 12.11 cents per pound at 15:15 GMT, after testing but failing to breach resistance at 12.25 cents on Wednesday. September Arabica coffee was down 1.2 cents, or 1.1%, at 102.90 cents per pound, after a sharp run-up earlier in the week. September London cocoa rose 23 pounds, or 1.4%, to £1,624 a ton, having plumbed 15-month lows on Wednesday on worries over weak demand and collapsing nearby premiums.
We will now take a look at energy price moves.
Oil futures were little changed on Thursday, supported by a fall in U.S. unemployment and Wednesday's drawdown in crude inventories, but the spike in U.S. coronavirus infections fanned concerns that economic activity will weaken in coming weeks. New COVID-19 cases in the United States rose by nearly 50,000 on Wednesday, according to a Reuters tally, the biggest one-day spike since the start of the pandemic. Brent crude futures gained 10 cents to trade at $42.13 a barrel by 15:17 GMT, after rising 1.8% in the previous session. U.S. West Texas Intermediate crude futures lost 18 cents to $39.64 a barrel after a 1.4% rise on Wednesday.
Moving on to metal price moves.
Copper gained for a sixth straight session on Thursday, due to supply disruptions in the world's largest producer Chile, and more signs of recovery in large economies. 3-month copper on the London Metal Exchange was up 0.4% to $6,093 a ton in official trading, after touching its strongest since January 22. The metal was on track for its 7th straight week of gains, which would be its longest winning streak in nearly 3 years.
Finally, we have the most recent news on the financial market.
The US dollar fell on Thursday after data showing the world's largest economy defying expectations for a second month in a row, creating jobs in June at a far faster pace than market forecasts. The greenback was on track to post losses for a second straight week against a basket of major currencies. Data showed that U.S. non-farm payrolls increased by 4.8 million jobs in June, the most since the government started keeping records in 1939. Payrolls rebounded 2.699 million in May. Economists polled by Reuters had forecast payrolls increasing by 3 million jobs in June. The unemployment rate, meanwhile, fell to 11.1% last month from 13.3% in May. The report further diminished the dollar's appeal as a safe haven. In mid-morning trade, the dollar index slid 0.1% to 97.064, as the euro rose 0.1% versus the greenback to $1.1262. The dollar, however, gained 0.1% against the yen to 107 yen and 59 sen. That is all for today's news on the commodity market. Stay tuned to TradeFlow TV as we continue to provide you with more updates. You can also follow us on Twitter at TradeFlow TV1, which allows you to watch our program on your mobile device or desktop.